Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today our guest is Scott Krone. Thanks for being on the show, Scott.
Thanks, Whitney, for having us. I appreciate the opportunity to talk.
My pleasure. My pleasure. Scott is a Chicago native whose career in architecture began in 1991. In 2012, Krone founded SSSK Capital Fund, a firm which manages a wide range of real estate, including single and multifamily homes, retail, commercial warehouse, and self-storage and multi-use flex athletic spaces. Currently, the platform of investments is in excess of $30 million. In 2018, SSSK Capital Fund was rebranded to Coda Management Group to complement his design-build firm, Coda Design Plus Build, an international award-winning design and build firm which specializes in sustainable building practices. Scott, thank you again for your time and being willing to share your expertise and with us today. So, give the listeners and myself a little more about yourself and your focus right now in this business, and let's dive in.
Well, again, thanks for having us. I appreciate it. So currently, we have two firms, as you mentioned, Coda Design Build and Coda Management Group. And Coda Design Build is predominantly our retail company where clients hire us to do design, build, and development for them. So we just finished working on our fifth church where we helped the church acquire the property, go through the zoning, we got them the financing, and then we designed it and built it for them. And then on our investment side is Coda Management Group, where we are taking underperforming commercial buildings and converting them into self-storage facilities, predominantly in rural areas throughout the Midwest.
I think it's a very unique skill. I guess it's becoming somewhat more popular now, but it's not something I think we've talked about on the show. And with the large buildings in places where it's like sometimes they can't find tenants now, or maybe older buildings, it seems like maybe that's a great option. But I'm looking forward to getting your expertise. So could we just dive into some of the things you all are doing as far as converting the underperforming buildings to self-storage, and maybe walk us through an example or a process of what that looks like?
So what it looks like is each market is based upon a 3 to 5 mile radius. And so we're very specific about where we are looking. Right now we're looking in the Midwest because we like the combination of, there are areas that are in need of it. So predominantly if you look at the East Coast, the South, and the West Coast, those areas of the country have a high volume or a high market of self-storage already. So we're looking at underserved markets. And there are in the urban areas, there are buildings that are large, between 70 and 100,000 square feet, that are not being fully utilized. And so we can come in and reposition them. It's a green concept rather than tearing down a building. We can reposition it and improve it, raise the level of green efficiency, and convert it into self-storage. And we like that because in the Midwest, there's a lot of opportunities with opportunity zones, where they're looking to encourage development, as well as PACE financing, which is another tool that we can use to enhance our capital stack.
Okay, so if you'd pull your mic a little closer, I think it might help a little bit.
Okay, how about that? Does that work better?
That's better, I think. So, you mentioned like the size of the building. If we're thinking about trying to, look into something like this, what size of building, is going to be, you say too small, or it needs to be this big or bigger? What are you looking for?
Like 40,000 square feet would be too small. So what we're looking for is between 70 and 100,000 square feet. That's the most optimal for us. It can be multiple stories, but it's preferable to be on a single story. But if it is multiple stories, that works as well, as long as we have elevators to service the upper floors.
And then, converting it to self-storage, or you mentioned, let's go back to you mentioned green concept. Could you elaborate on why that's important?
Well, the first component of green is that you can reutilize rather than tearing down, adding waste to the landfills, all those sorts of things. So if we're tearing down a 100,000 square foot building, there's going to be a tremendous amount of waste, even despite the attempts to recycle. And so, if we can keep those buildings out of the landfills, and we can shorten the amount of construction time. We can limit the amount of times that we have to expend fuel to bring new supplies in. These are all components that help be more green. And that's actually, when you look at LEED certification or Green Star or any of those other LEED programs, that's one of the first things that they try to do is utilize existing buildings. And so that has been, that's the major factor of what we're trying to do. The fact that we can also get these below replacement cost is also a green factor, because we're not expending money and energy to rebuild a building, which is a lot more expensive than what is already there, which we can buy.
What about the time frame from being able to, you get a property like this under contract, or, and going through the due diligence phase? I was just thinking about like the due diligence process on an older building like this and being able to convert it. There's so many unknowns anyway in any, large commercial property purchase. However, I was just thinking about, converting something like this. What are some things, or first, how long is the process like that going to take, just the due diligence and to close?
The recent building we just closed, we closed it very quickly. We closed it in 60 days. That was abnormal. The seller was very aggressive in terms of the time frame. And so once they learned what we were going to do, then they were going to try to do it themselves. And so they didn't give us a lot of ability to negotiate or to really do a lot of the due diligence. So we closed, and then we created the permit drawings and then submitted. So we sat on it longer on the front end than what we'd like to, just because of the fact that we had to close quickly. But typically, due diligence is about 90 days. And then once you get past that, another 30 or 60 days to close, depending on the financing. And then we have to submit for the building permit. So that process, can take a couple months, or it can take quite a while depending on the municipality, and then about 9 months to build it out.
So how long till a property like this is going to cash flow?
It will cash flow in terms of operations after 11 to 12 months. From debt service perspective, it will be another year after that.
Okay. And tell me about the type of financing that you all would have to have on something like this.
Well, the last couple of projects that we've done with PACE, or we're trying to do currently with one project right now with PACE. It's qualified for PACE. So we're in the process of getting that done through the local municipality, and then we just have traditional debt financing with the local lender.
Okay, and what is PACE?
PACE is through the Department of Energy, and it is a federal program that is implemented by the states, where they're looking to reduce the carbon footprint and increase the energy efficiency of buildings. And so if you have your building evaluated and you can show that you can increase the level of efficiency in a building, the improvements are financed through the property taxes. So a special assessment is applied to the property taxes. And so you can either go through the local port authority or private PACE funders, where they create a debt structure that is amortized over the lifespan of the improvement, and the amortization schedule is applied to the property taxes. So you pay twice a year, and lenders view it as not as a debt structure, they view it as equity, because the cost is above the line item. It's part of the NOI. And so it's part of the property taxes. And so there's only one lien on the property, which is the first, and the PACE instrument is not liened on the property other than the taxes.
So why go into the underperforming buildings and self-storage? Why not, multifamily or original self-storage, or, what is it about that niche?
Well, I was in multifamily. I began in multifamily. My master's thesis was a 400 residential unit development on 50 acres. That was, close to 100 million, if not exceeding $100 million in revenue.
Wow.
And so, the first part of my career for the first, 6 to 8 years was all in multifamily. And then after the crash, I also began buying distressed apartments. What we saw was that the cap rates were so compressed that it was very competitive and hard to get into that field. On the flip side, during the crash, self-storage was booming, because it actually does better in a recessionary market, because as people reduce the size of their housing units, they put things into storage rather than getting rid of them. And then also they're looking to preserve. So self-storage historically has done better in a recessionary market than an expansion market. And so when I was first looking at self-storage, I was trying to find a distressed self-storage, and I couldn't find one. And that's how I got into it. Now, the other side of it is, comparatively, more money is made in the development process than in the repositioning process. So if self-storage is performing and you can only move it from, let's say, a 9 cap to an 8 cap, you're really not going to make that much margin there comparatively to the original class, what's called the first generation or class C operations. What we're dealing with is third generation or class A, which is all environmentally controlled, urban settings where you're driving into the building, the garage door comes down, and you're unloading your car in the building, and then you use a cart to distribute your goods into your locker. So it's an entirely different model than the original self-storage operations.
Wow. So you drive your vehicle in the building and unload. That's interesting. Tell me about the risks that maybe an investor would be worried about in a type of asset like this.
Well, every real estate has risks, right?
Sure,
so
everyone.
The thing that we like about self-storage is I don't have to worry about color selections. Henry Ford was great with his quote that, my buyers can have any color they want as long as it's black. For us, our clients can have any color self-storage unit that they want as long as it's white. The thing that they get to choose is what size, right? So that we eliminated the risk in terms of the finickiness of a buyer in terms of liking brass or chrome or gold or any of those sorts of things. What we look at self-storage is it's apartments without toilets. And so, we've whittled this thing down to the most economic basic unit that we could possibly do. And so the biggest hurdle within self-storage is not the market, it is how much competition you have. And so what we look for is when we go into areas, we're studying a 3 and 5 mile radius as to how much competition is in the marketplace. And we can monetize that. We can analyze that in terms of what is the amount of self-storage in relationship to how many people. And if we begin hitting and approaching a mark, then that means that our rates are going to come down, our lead times are going to expand, and all those sorts of things. So we like to go into markets that have a heavy demand and not a whole lot of supply. So that's how we buffer against competition.
Okay, so here's the simple truth. If you don't have private investors waiting on the sidelines right now, you're going to have a hard time closing your next syndication. Are you afraid to talk to investors? Do you feel you have a lack of credibility, or no one will take you seriously? Or what about your systems? Do you have anything set up yet? Well, if you know you can improve on getting in front of and influencing passive investors, then you should call my friend Adam Adams. Adam has a proven system for you to flip the script. Now, this is a 5-figure investment for you to take your business to the next level. I want to see you succeed, so I placed a link in the show notes for you to apply to work with the Adam Adams. And if you think you qualify and you know you're going to take action on what he teaches you, then scroll down, find the link, and take your money-raising abilities to the next level. What are some big mistakes you would say somebody starting to try to do what you're doing would make? As far, I can just imagine looking at this old building, trying to assess, can we make a self-storage building out of this?
Well, we were asked to look at one building that a person was evaluating in Cincinnati, and they thought an old parking garage was going to make for a good building. Well, in a parking garage, a lot of the floors are ramped so that you can get from one level to the next. The size of the elevator was small. The zoning wasn't there. And so when you looked at each of these factors and the column layout made it very difficult, it made it hard to put self-storage in there and overly costly. So we actually, discourage the person from going into that marketplace. The other one is if you don't pay attention to the level of competition. We see people wanting to do this, and the metric is how many square feet of lockers per capita. And this one woman who we were talking with, she's like, I own, 6 acres. I'm going to make the property in self-storage. It's going to boom. And I asked her how much other competition was around her. She goes, there's not that much. There's no other self-storage facilities around me. And I just did a quick Google search, and there was 18 other facilities. And where market tends to hit, supply, or supply equals demand is around 7. And her location was already above 9 without her adding a single square footage. And I was like, whatever you do not put self-storage, and it would be the absolute worst thing you could possibly do.
Wow. So ultimately, not knowing your market, not knowing your competition.
Absolutely.
Wow. Okay. So what about return structure for, how you're structuring these deals with investors?
Well, that's the other area of creativity that we like to bring to the table is that we're looking at different ways in which we can increase the yield for our investors, which is either through historic tax credits, which we've done on one property. We've also utilized the opportunity zones as well as PACE financing. So these three different components are ways in which we've been able to increase the yield for our investors while not increasing the level of risk. And so we see that as much as the creative structure as how we find the property or design or lay it out.
And you are in Chicago, but tell me, are there certain parts of the country you're focused in other than, I know you said Midwest, but are there certain states or cities and maybe why you like those areas?
Well, right now we're in Wisconsin, Illinois, and Ohio, and we're looking in Kentucky, Michigan, and surprisingly, we found this little sliver perhaps in North Carolina that we're evaluating. But those are the markets that we're considering. We've looked at Indiana, we've looked at St. Louis, the Missouri areas, we've looked at Iowa. It's just a matter of if we can find the right conditions to make it worthwhile.
And then locating a property like that, are you going to find a broker usually that has a property like that listed, or is this going to be something that's like, this building's been vacant for 20 years and we just got to locate the owner?
Both. I mean, some have been on the market that we've identified, and others have been off market where we've had local people reach out to the existing owner and say, would you consider selling? And so we've done both, and both processes have been successful for us. And so when we are working with brokers, it's pretty easy to eliminate things right off the bat, just in terms of size, in terms of the layout, the proximity, those sorts of things. So we can go through those lists pretty quickly. We have worked with a great broker in Ohio that has found off-market properties for us that has done very well for us. And so he's now actually looking in the Michigan area, and he just knocks on doors and talks with people to see what's out there.
So Scott, you've done so much in the real estate. I mean, you talked about the multifamily and now you're in numerous different things we discussed, but as far as different asset classes, and now this seems it's very niche, and it's really neat. I'm very intrigued by your all's business model. But what's been the hardest part of this real estate business for you?
Well, I think when you're beginning, the hardest part is getting people to believe in you and what you're doing. And fortunately, my background taught me a lot in a short amount of time. I began the process when I was 21 getting my master's. And so by 24, I was running a 40 unit, $25 million project with two other people for, the company I used to work for, in addition to the larger project as well. And so, I had a lot of experience in a very short amount of time, but even when I began my own firm, I had to overcome the obstacles or questions of, do you know what you're doing? Are you sure you're going to be able to get this thing done? And granted, I was 28 and I probably looked like I was 18. And, I still get carded despite the fact that I have far less hair than I do now. And so, I had far less hair now than I did then. And so the biggest thing is just getting people to understand and believe in what you're doing. And, you have to build that track record. You have to build that record of what you've been doing. And that has always been the hardest thing in terms of, if we first went into single family and then we got into mixed use and then we got into commercial, it's always the next stage. And fortunately, I've been able to look back and rely upon the things that I have done in the past and continue to build off of that. And I think that's one takeaway for people when they're trying to get into this is that it's hard to start big. It's easier to start with something that is manageable and then grow from there. Don't be impatient with the process.
Yeah, it's hard not to be impatient, hard to be patient. And, that you see this success or so-called success you think everyone else is achieving. But if you never get started, you're not going to get there.
Absolutely.
So How are you prepared for this potential downturn that everyone's talking about?
Well, I think there's different downturns. I think there's locally and then there's nationally. And so, as I said, self-storage tends to do very well in a recessionary market. So one of the things that we've done is we've stopped buying in Illinois because we feel that market is a little bit more in fluctuation. And so that's why we're looking throughout the Midwest. We're also looking at not over leveraging our properties, making sure that there's a healthy level of debt. When before the crash, lenders were giving us like 90% of costs of what we were doing and the extreme leverage on them. We didn't turn one building over to the bank during that period of time. And it was because we saw the market coming and we began to get out of it and we weren't buying. And so those are the things that we look for. We look at the signs, we look at what's happening in the larger scheme, plus also the local markets, and then not overextending ourselves. And so that's the biggest thing that we do there.
What's a way that you've recently improved your business that we could also apply to ours?
Well, we've really begun implementing a tool called the Enneagram within the company. Not only within the company, but also with the clients that we work with, in terms of understanding how people, what their motivation is and how they react and feel and communicate. And so if we can be more effective in understanding where they're coming from, then we can alter the way in which we say something so that we can get a more healthy response or a more timely response and create a better relationship. And so those are the things that we've been doing in the office, plus as well as working with our clients.
What was the name of that tool, or what was that?
The tool is called the Enneagram. It was developed by these 4th century monks. And there's a couple books written by them. One's called The Road Back to You, and then the other one's Sacred Enneagram. And they're both really good books in terms of presenting the concepts and understanding the tools.
A book called The Road Back to You.
Right. It's by Ian Morgan Krone. It's a different spelling, so I'm not getting any royalties off of it. It's not a relative or anything like that.
Awesome. Okay. No, I like looking stuff like that up. So tell me your, let's see, the number one thing that's contributed to your success.
I've had people believe in me. From the time that I got into architecture, I had people support me on that road and that path. And then that opened up doors that got me into the company that I was working with. And, they believed in me and put me in a position to succeed and grow. And so even when I started my own company, 28, which is incredibly young to start a company, my first investors really, did believe in, after we gave them a 90% rate of return on their investment after the first deal, they said, do it again and don't tell anyone. That's right. What I do. I'm going to perhaps be limited by what they want me to do. And so, but throughout that entire process, it's just having a group of core people that do believe in me, and including my wife and my family, and just supportive and backing what we're doing.
What's a way that you stand out in your relationship with your investors?
Well, we do all three things. We're developers, we do the design, and then we do the build. And so we understand the entire process. And typically you have a lot of developers who then go and hire an architect, who then go and hire a GC. Mm-hmm. And so it's a three triads. But when someone comes to us with a zoning problem, we can answer it. When someone comes to us with a design problem, we can answer it. If someone comes to us with a construction issue, we can deal with it. And so a lot of times when we go into a market, when we have a property under contract and we're finding local people to local contractors to bid out the work, they want to know what the likelihood is that we're going to get the job as the GC. And, we explain them, well, we're also the owner. So, you're not competing against three other GCs to see if you get this and five other subcontractors. We already own the property. We're the builder, and this is how we're going to do it. And so we can streamline that process.
And how do you like to give back?
Well, our family has been to, I know you've been to Africa and you've adopted a few kids from Africa, our Africa touched our hearts as well. And so we have been involved with a boarding school in Rwanda that was established in response to the genocide. And we took our kids over there to work for 9 days when they were from the ages of like 3 or 4 to, they were like 7 or 8. And so we've been involved with that school and that community for a good long period of time. And even just this week, I've been in communication with some of the boys that we met there. They're no longer boys, they're young men, and they're developing their own businesses. And so we're still in communication with them. We're still supporting, them in terms of like giving them ideas and business tips, just investing in them as, and it's been a real investment back to us in terms of their involvement and their, just having them in our lives. So that's one area that we like to do. And then also in our local community, just in investing in different things that our church has been involved with. So those are the main ways in which we get involved.
Wow. Well, thanks for sharing that, Scott. I'm grateful for your time, and I've enjoyed, I hope the listeners have enjoyed learning about how you all are converting underperforming buildings to self-storage. I think that's a new one for the show. And so grateful for that knowledge that you've shared with us. But tell the listeners how they can get in touch with you and learn more about you.
You can look at our webpage. It's CODA, CODA, M as in management, G as in group.com. So that's CODAMG.com. And there's blogs, there's other information that we have out there that you can reference and reach. And then if you click on it, you can also get in touch with us that way. So that's the best way.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.